Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, April 23rd, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We continue to march quietly higher here. It's been a melt-up phase ever since the beginning of the month. First trading day of the month was an up day, and since then it's just slowly melted up. We've gone sideways for the last 6-7 days here, and that's given us a pretty tight range to work with. Yesterday was a very quiet day throughout most of the session, at least after RTH, and right now we're kind of building up again for a bigger move to come at some point here soon. We have quite a bit of earnings coming out. Twitter just came out, obviously, and is up. So I mean, various stocks are going to come out with earnings, Amazon and others, and so that this week, so that's going to make for perhaps a very nice situation soon where we could begin to see quite a bit of movement in the coming days, or perhaps into next week as we head into the beginning of May. So overall, not a whole lot to do at the moment, other than, you know, price continues to push higher. We're still inside the range. We could see further development. Again, given the current trend of the market, I still favor any pullbacks and to buy into weakness for a shot at continuing this thing higher. But of course, we are starting to run out of runway here before we hit all-time highs. Again, one last thing here, you know, from a long-term perspective, let's go here to a weekly chart. Again, you'll see that we've made quite the move to come back toward these highs after the recent sell-off last year. These are the lows here, and we have almost an expanding range that's developing. So if we do take out the highs and hang out up here for a while, again, theoretically speaking, we could begin to come back into that expanding range, perhaps even come all the way back down to take out those lows before we come back up. But overall, this market continues to remain bullish now, but we are running out of runway here, where at some point perhaps we see a wider correction. So again, we may be running out of runway, but for right now, everything's still pointing up. Okay, let's take a look here at the NQ. Very similar price action, but a little bit more bullish in terms of its melt-up phase. Again, a very strong start to the month here, and then from there, it's been a very quiet melt-up phase. We talked about that for the last couple of weeks and how this thing's just kind of melting higher and now pushing through highs again since last fall here, now taking those highs out and holding. So if we look at the wider time frame again, you'll notice again very similar price action to the ES here, where we have kind of that expanding range. Here's the recent highs, taking it out. We could certainly trade up here for a while, as we did, but if we fail to hold above 7700s, that could offer some sort of correction, whether it's back to the midpoint of this range or perhaps even all the way across the range, theoretically speaking. Same analysis that I gave before, and it actually happened here all the way down and through the lows. Again, it could happen again. So again, this is a very bullish market. Everything's still melting up. There's no signs of weakness yet, but that doesn't mean that something couldn't develop here soon. So overall, this market still remains bullish. I'm still looking to buy into weakness, but watching up here very closely to see how it develops over the next few weeks, because any rejection up here could lead to a pullback down the road. All right, let's take a look here at crude oil. You'll notice that crude pushed through 66s for the first time in quite a while. The last time we were in this zone was back around the end of October, beginning of November, and that's really when the huge sell-off really began. Obviously, up here was a very nice rejection. We had a perfect entry at that point, but this is where price really broke down, was right in here, and we've made it all the way back to that level now. So we've done quite a bit here in terms of moving higher off the recent rejections, and this one's been very bullish and unidirectional for the most part. Up here, any rejection above 66s early in the day here is showing a failed new high. That could at the very least return prices back towards 65s, which is right at the midpoint of the day. So again, any pullback towards 65 could be seen here today. We're about 60 ticks off that zone right now. But overall, this market remains bullish, and even if price were to drop as low as 63s, that could be an even better zone to watch for rejection and continuation. So right now we may see a little bit more weakness towards 65, 64, 75 to 65 offers an intraday LVN in that zone. So I would imagine that any pullback into that area, at least on first test, could be seen as an intraday buying opportunity. Failure to hold there could open up quite a bit more weakness on a day time frame basis and also on a swing basis. So we'll keep an eye on that zone for crude oil. Lastly, taking a look at gold here, you'll notice that gold continues to hold right below the zone. And this is what I mentioned before, in that if we break down through 1280, it could be a huge move. We broke down through 1280, but it has not been a huge move. It has held for 4 days after the initial breakdown. And that is unusual in that it appears they're getting folks short before they may squeeze them. Similar to what happened here, similar to what happened here. So, again, this price action right here, watch it closely, because if there's any failure to hold below, the 1283s, 1284s, that could offer quite a pop back up toward 1300 at the very least. Obviously, we have lower highs in play right now. So if this thing were to bounce somewhere between 1295 and 1305, could be a very good target on a near-term basis. And again, if price were to bounce up toward 1290 and see a lower high develop and strong rejection there, perhaps that is what leads to a broader breakdown. So keeping an eye on prices in gold here right now, still showing signs of weakness, but not really breaking down hard, which makes me believe here that we may be seeing a trap. So if you look here, one last thing, this is the previous month's low right there, 1280, right? That's the previous month's low here. You can see the blue line, and we're forming a box below it. So again, any failure to hold below that level could lead to a squeeze. All right, that is it for now. We'll see how this plays out heading into the new session of trading. Good luck, trade well, and I'll see you in the trading room. Take care.